Free, by the way, later on to take pictures of any.
Alpesh, what's happening in the markets?
Well, they're defying gravity still. And a lot of people, because it's the new tax year after April the 5th, people are saying to me, Alpesh, we've got money to deploy. What shall I do? What shall I do? And I have to say, unlike January, February, March of this year, I'm actively now looking at investments to make, and I'll come on to that in just a second. But now I'm starting to actively look at these investments. Obviously, people are still worried about inflation, war, possibilities of recession. They're talking about the yield curve, which is going over the heads of most people. They're looking at higher prices in commodities and all of these things and saying, why isn't the market falling? Is it about to fall? Do we sell the rally, buy the dip? So I'm researching hard. It takes more effort in a market like this to find good quality companies than in a regular one, but that's what's happening at the moment.
Very positive. So what's a stock you want to mention?
Well, there's a couple that I've already decided on. It's on my Telegram channel. I go, well, actually, there's more than a couple. There's the easy ones, and I've been looking at, do I buy more? Because obviously, new tax year, new capital to deploy. Sold last year's 12-month holds, particularly my ISA and my SIP. So companies like AutoZone, I got out of because 12 months are up, and I'm just going to have a look here on some of the names that I put up. And so one of the things I've been debating and thinking about is, do I go into 2 times leverage, and that's higher risk because it's leverage, 2 times leverage Microsoft, 2 times leverage Costco, or just go 1 times, because I probably will stay, some of my capital will relatively stay safe and go into Microsoft and Costco, Alphabet, Apple. But then beyond those, I look at some of the stocks which are really popular with other hedge funds, and I cross-reference those with my own research and with looking at valuation and all of those kinds of things. And I'll tell you some of the names which have come up over there. I've held Visa on and off for the last couple of years. Very popular with the hedge funds. Still looks all right, but I'll have to make a decision during the course of the week, and maybe when we do our next week update on this, I'll be able to say to you, yeah, I'm definitely getting in, or otherwise. Qualcomm was one of the ones which had come up on my filtered list. It's really popular with other hedge funds, and I haven't got into it yet, and I'm probably going to finalize that decision this week as well. So these are on my sort of watch list. United Health, I will. It's a lower volatility company, massive multi-billion-dollar company, again, meets all my filters, hits those of other hedge funds. But also one of the reasons why I'm just looking at the other screen in case you're wondering, why the hell is he not making eye contact on a Zoom call? It's one of those which is lower volatility, safer. So it's probably going to go into my son's ISA because he's got his New Year allowance. So is my wife. And just going to see. Yeah, so those are a couple of names just to give you for now. There'll be more names next week and all the rest of it, which is why people should follow this.
Great. So you mentioned your Telegram channel. Is that available to everybody or only your students?
I've got 2 channels. I've got a public one and a private one. The public one, everyone can go on, and a lot of these are often mentioned on there, and I share, a heck of a lot of material with the public. Then there's a private one just for some of my students, which has some of the proprietary stuff and some of the confidential stuff. But if they go on the public one, and they'll find that on all my social media links, even around this video and stuff, then they'll get a lot of this information and the analysis behind it as well. It's a good way to learn. It's all completely free on the public one as well.
Great. Any warnings for students?
Well, as always, look, all investing is risky. It's not a bank account. It's always risky. But what I'd say is, equally, the younger you are, the more you should, learn and start, because time goes like this, and even if you're starting with a small sum of money, if it's just £100 or $100 going into account, at least you've got through the barrier of opening the account, knowing how to do that, and buying a stock, knowing how to do that as well, because it builds up your confidence, gets you further down that route of saving for your older age. And you might say, well, listen, I'd rather just, go on a holiday to wherever. Yeah, of course, do that as well. But just learn this stuff in baby steps and small sums. And for older people, people get panicked, they get greedy, given what's happened in the last couple of years and the markets have done so well. And so they say, I want leverage, I'm going to lever up on all of this, and they can blow large sums of money. So there's risks for the young and there's risks for the old, and just watch out, depending on your age group, the risks which apply to you.
Great. And how are you feeling about global happenings?
Well, again, for a long time now, I've been expecting the markets to be a lot more pessimistic over the last 2 years, not just since coronavirus. But right now, if we look at this week alone, it is a lot harder, given what's happening in the world, for me to pick companies which are just going to go up and up and up. Because remember, I'm not gambling. I'm not trying to gamble on companies based on the latest, missile contracts by the Germans, and say, right, let's dive into Lockheed Martin. It's more about, well, do the numbers and the cash flows and the earnings and the profitability and all of that work out? So I'm not chasing either my own tail or the market's tail, as it were. And that being the case, in one sense, no, I'm not worried about global happenings. Secondly, yeah, it's getting harder to pick good quality companies because there's fewer of them around which are resilient enough to go through the headwinds of what we're finding. It's like going through a storm at the moment. I mean, you've got to admit there's a global storm, and it has been for 2 years. So the numbers of companies which are still fighting through that is getting more and more limited. You're losing more, you're getting more casualties of the sort of market, as it were, over the last couple of years. So there's fewer and fewer companies, and so we're having to filter more and more. We're having to look deeper and deeper and work harder and harder for our returns at the moment, and that's like any other company. I mean, we're a business as well, in the stock selection business. Well, it's getting a little bit harder right now, but that's just the way it is. It can't always be easy. So yeah, and you'd hear that from companies. There'll be years where Apple will say to you, everybody loves our products, we're just making money hand over fist, or a bank will. There'll be other years where the banks or Apple will say, well, it's getting a bit harder at the moment, market seems a bit saturated, we're going to have to wait for the environment to change and people to get more confident, etc., etc. So yeah, it's a little bit more difficult, but nothing which keeps me awake at night.
Okay, and what are you looking forward to?
What am I looking forward to? I've got a couple of things going on. April the 20th, I'm giving that speech at the House of Lords on investments and climate. So that's something to look forward to. Last week, I gave a talk at the Science Museum on a space venture capital firm which had invested in SpaceX, which is Elon Musk's outfit and sends rockets to the moon and all the rest of it. So they were one of the investors in that, and I met up with those guys, and I look forward to doing more with them. But like I said, there's a couple of talks coming up as well, which, they're keeping me excited. I normally put invites to these things, whether it's the House of Lords or I'm going to be speaking at the end of this month in London, in central London, just outside of Covent Garden, at an event on investing. I normally put invites and try and get free tickets for my followers on Telegram. So again, have a look at Telegram, or have a look at my LinkedIn and my other social media. So try and share that and be accessible to people as much as possible, because as you know, I'm on this campaign to teach 1 million people how to be better investors, and the more people I can reach, the better. So yeah, I'm excited about that. It sort of gives me a bit more of a zip in the morning. And the older you get, everything starts looking the same after a while because you've been on the planet way too long. So I'm excited about that. The one other thing I'm excited about, Lindsay Ruth, I've just seen it on my desk, the CEO of Electric Components. I, of course, interviewed him. You set that interview up. He's a FTSE 100 CEO. We've just published that interview, and I'm looking forward to, and I'm going to do it with my lucky gold pen in a moment. He says looking for a book. I'm going to send him a signed copy of one of my books as well, and thank him for doing that interview. So that's another thing. I'm looking forward to writing a little message to him on that. Highlight was last week. I can't say I'm still looking forward to it, but I'm still milking it. When I dropped my wife off to Downing Street, she was meeting the Prime Minister. So yeah, I'm still living off that a bit. Really pleased for her.
Excellent. Thank you.